Hey, what's up, everybody? Want to give everybody a warm welcome here. We're going to be starting in about like 24 minutes. We're going to be starting here with Chief Market Strategist Matt Maley, lead trader at the Stock Picks Inner Circle chat room. Right now, he's conducting a trade session right now, but he will be here with us once we get started at 6 p.m. Eastern. Um, and we're going to go over several different topics. Make sure that you don't miss out this session. Put it in your calendar. Put a reminder. You got 23 minutes left, so we're going to go over not just all the Fed talk, but we're going to talk about sectors, trade ideas, what's going to happen, what we foresee happening based on what's going on. All of this from Matt Maley's perspective. Again, 40-year Wall Street veteran. And for those that are asking, yes, that's Jerome Powell there on the screen. He might be a special guest. Who knows? But yeah, guys, we'll see you here in 23 minutes. Make sure you're here, paying attention. It's a very important session we have today, so make sure you don't miss it. And if you have any questions, put them in the chat. Again, just popped in here to say hi and what's up. And we're gonna be starting in like 23 minutes, so we'll see you guys here in a little bit, and we're gonna get started in a few, guys. All right, everybody, welcome. Welcome to the session here. My name's Rodrigo. I'm going to be here with you today, and we will be with our amazing lead trader from the Benzinga Stock Picks Inner Circle chat room and chief market strategist at Miller Tabak, Matt Maley, 40 years in the industry, director of trading at Merrill Lynch, Solomon Brothers, and chief market strategist. A lot of you guys have seen him from on interviews on CNBC or Bloomberg, some of those places, and that's fine. And a lot of you guys actually know him from the chat room. Today was a very intense day. I'm going to be honest. There's a lot of volatility in the markets, and Matt loves that. I can tell you that for sure. So just a couple things there, and I want to give a couple shout outs here to some of the folks. We got Chris Notif in the house. What's going on? Steve, what's going on? White, how you doing? D-Rack, Mike, good stuff, guys. So we have a very familiar, friendly crowd. I can recognize some of the chat members here. So good stuff in the chat. Go ahead and let me know when you guys are ready to start. We have a timer if just to make it, pretty much clear when we're going to start. So whenever you guys are ready in the chat, let me know when you guys are good to start. All right. And for those that were asking where Matt Maley was, Matt was in the live session trading in the chat room. That's Monday to Friday, 9 to 5, 5-ish plus PM Eastern. So today was the Fed, stuff today. So it was pretty much traded in and out. We're going to show you a little bit about what we did today in the chat room. As far as the topics, trade ideas, we're going to look at Matt's strategy for trading options, sector scoping, options education, setups for equities, crypto, commodities, buys and sells, charts, market discussions, a whole lot of stuff. So make sure you do stick around until the end. We do have a Q&A there, and we're going to show you guys the live Inner Circle chat room. So without further ado, let's go ahead and bring the man himself, Matt Maley. All right, so let's go ahead and bring in Mr. Matt here so we can go ahead and chop down the markets.
You see me there?
Yeah, I think we're good there, Matt.
Okay. So make sure you can see me. I can't see myself. Usually I can, but that's okay. Yeah, thanks for being here. What a day today was. Oh my goodness. And it was it was kind of fun. Let's see, kind of funny. We had, we sat around, watched what was going on. We didn't do a whole lot in terms of making trades earlier in the day because we just, we're waiting for the Fed to do what it was going to do. And the volume was very, very light going into the Fed day, for the Fed decision at 2 o'clock, then 2:30. And really the market didn't do a whole lot. It bounced around a little bit. But then when Powell started speaking, especially when he made a comment about that there kind of took, or basically took, a 75 basis point rate hike off the table, and that just let the market take off. And because to be honest with you, going into it, I was a little bit more concerned. I thought that the Fed would be more hawkish, so we had some negative bets on. But because I knew it could go either way, and I certainly felt that I was not pounding the table to be bearish as I had been at other times in the marketplace, I really felt this, that we could see a rally, and so we did put some very nice hedges in the index ETFs. And as you see there, we saw some people making 170% profit. We bought what's called the TQQQs. You see 160 probably. I mean, at one point we were up about 75, 80% on the QQQs. And I said, let's, we got to take some of this off the table. And we did. Other people held on to it. And again, you see here what that Rodrigo is showing you here, that we have 25, the Bank of America calls, excuse me, a number of stocks that I really like going into this. And as I said, like I said, even though I was concerned, I wasn't adamant about the negative stance. I said, here are the stocks that we should be talking about. And NVIDIA, there was several names that I talked about. One of them was Bank of America. And one of the reasons why I highlighted Bank of America was because it was, JP Morgan looked just as enticing. But the problem is the stock is $140 stock. So therefore buying its options cost more. And Bank of America is about $40 stock. So we went and bought those calls. And you can see we made 200% gains on those. And just in just one day. I mean, in just a few hours. And
Right.
one of the things we talked about at the end of the day is when we come in, we do these things. I like to go in and say, hey, this is where I'm buying them. This is where I'm selling them. And people are, one person, as you saw there, said, geez, I'm up 160%. What should I do? And I just said, look, yeah, the market could definitely go higher, but you can't, when you make 160% in 2 hours, you can't leave that. Because if the market opens down tomorrow, you'll lose it all. And it's just, you'll never forgive yourself. And if the market continues to rally, you can go back in and make that bullish bet. You might leave a little on the table if the market cap's open in the morning, but when you make that much in a very, very short time frame, you want to bank your profits, which worked out very, very well. We did it, whether it be Bank, and the same thing with the Bank America trade. I was saying, they told one of one of the subscribers just said, what should I do here? And it's like 200% in a couple hours. You can go back in. Believe me, Bank America is down. It's kind of out. We want to be able to get out. It's going to have plenty more ups. If this market continues to the upside, you're going to have plenty more to make. Don't get greedy. Don't try to make 100%. If Bank America is going to rally 20% in the next couple of weeks, you're going to be able to buy the call option several different times and make several 100% each time. So don't worry about trying to get it all at once or trying to get, you're not going to get all of it. If you make 500% in 3 different trades, somebody else might make 550. Who the heck cares? You're making 500%.
Right. And
move on and make the thing.
so I'm going to be honest here, Matt. I knew today was going to be a volatile day. So like I was in the chat room, I had it open throughout the day, throughout the whole market meeting. So I was able to take some of those trades as well. But look at Viking Chef, EPD calls are up almost 100%. So natural gas, you've been covering natural gas there as well. Or they're
Yeah,
talking about it?
that's the thing is we want to talk about all different things. I mean, we had another one, and I'll go into, well, I'll mention that we had another call in the dollar right now, but we have made some great profits in the China stock market and the ETF in the China stocks. And then here was a situation where natural gas and I was very bullish on, it was funny because when oil got to $130, I had been bullish on oil for a long, long time. And I turned cautious on a near-term basis and said, thing is way overbought. Let's walk away. Let's, cut back on our exposure to some of the energy names. But then when it came back down, I got bullish again, got particularly bullish this week. And same with natural gas. And, late last week, I was talking about names that could do well this week. And one of them was Devon Energy. They reported great earnings. The stock was up 10% in one day. The options were up even more. I must admit, I did not specifically state specific options in that one. So I don't want to take credit for something that we didn't call. But I did, suggest Devon DVN in the stock's a huge run. So these are the types of things that we try to focus on a lot of different things. Whether it be the broad market when we buy the QQQ options, or the SPY, which is obviously the ETF on the S&P 500. But individual stocks, like I mentioned, Devon, Bank America, then the FXI, which is the ETF for this large.
Yeah. So
China stocks. So we've made some great money in a lot of different areas.
So these are some good trades from today, and these are just what the members did. But do you have I mean, here's the thing. This is a strategy. You've been doing this for 40 years, Matt, right? So a lot of the folks want to see, I guess, how you apply this. So do you have other trades that you could show the folks? I know that you had the FXI trade, which some people made up to like even 14,000%. That's the record. I'm just going to say this here for everybody to know, like, what's the deal? Okay. Matt Maley has the record of the biggest trade percentage wise with not only FXI calls, but also even before that he had the record, and it was for about 7 or 8,000, 6,000 on Viacom, shorting Viacom on puts. And if you notice, you're looking at one company that was a meme stock, and the other company is a China ETF. So Matt is looking for volatility. Matt embraces volatility wherever it is, and he's a chief market strategist. So that means that he has a understanding of the global markets, and you can profit from global disruptions and things like Chinese ETFs and things like that. And Matt's going to explain it here for us.
Right. I mean, can you see my screen okay there, Rodrigo?
Yeah, we're good there, Matt.
Make sure you saw the FXI. So this is the FXI. This was just, you can see it was in mid-March, just a couple of weeks ago. And and I'll believe me, I'll show you some other real nice trades we've had more recently. But in the FXI, that is the China's large cap ETF, as you can see at the top. Now, as you also see, this chart is a month and a half old, so it's not last weekend's chart. It's the chart I showed in mid-March. And just told everybody I was looking at, I was bearish on China, and I had been bearish on China for a long time. And you can see how well that worked. It was the group went, the whole market went down for basically all of last year, for most of last year, and this year as well. And of course, the reasons, we all knew the reasons. Let me just tilt that so you can see me a little bit better. The reasons were obvious. I mean, they kept coming in. It seemed like every 4 to 6 weeks throughout 2021, they came in and hammered another technology or another industry. Started off with technology, and then they went to all sorts of different things. Education, they just kept nailing. Retailers, gambling, gaming, etc. And each week, and it just said, oh my gosh, they're just trying to deleverage this economy in a major way. Well, also we had, though, right here, as the market really started getting slammed, they also had a situation where the SEC here in the U.S. was threatening to delist a lot of the Chinese stock names, and it became ridiculously oversold. Now remember, here again, this is what we're looking down here at the RSI chart, Relative Strength Index. For those who are not familiar with it, the red line, that's when it gets up to 70. I'm sorry, that indicates that any stock, in this particular stock, is getting overbought. So they have a red line, stops, don't buy anymore. And it gets down to the green line or a little bit below it. That means buy. Green, go ahead and buy. It's getting oversold. And you see when it got oversold there, see a nice bottom there. Got oversold there. So bottom of the last, those, that's a percentage basis. Those are very nice moves. Same thing here. Resulted in a rally, but this one had gotten ridiculously oversold. I mean, when you get an RSI below 30, it gets oversold. You get an RSI below 20, it's very oversold. This dropped to 14. This is about as oversold as you ever see. I've only seen one other thing get more oversold. So I was in here saying, hey, this is one we really got to play in. It's just, even though well, I am bearish on a longer term basis, and even on an intermediate term basis, but short term, it already is washed out. It was as oversold as you could get. I was basing it totally on technical analysis, not on also my years of experience and knowing that whenever the market gets crushed as hard as it did, the Chinese government comes in to protect, to help they goose the market. Okay, so I had the technical analysis and experience to tell me this thing was going to bounce back. Well, sure enough, look what happened. The next 2 days, I should say, the thing bounced 27%. That was just for the stock. This is for the market, the FXI, the ETF.
Really quick here, Matt, and you're just for everybody here to confirm and everything. You're posting entries and exits, and you've done this for every single trade in the chat room. You're posting entries, you're posting exits. So these are all actual buy alerts and sell alerts that you're marking there, right?
Absolutely. We got it right at the bottom. It was. I mean, if we didn't get the exact bottom, I mean, so the market was up 26.5%. I mean, what's the difference? I mean, it didn't matter. We were very, very, very close. I can't. In an intermediate chart, doesn't make any difference. We got very, very close to the exact bottom. And again, it was very, very oversold, and it bounced back. But we didn't just buy the FXI. We bought the FXI call option. Okay. Now, this is where we came in. Again, it was very the end of the day, right as the stock was, as the FXI, the ETF was making a low. And I came in on the chat room and said, okay, here's the FXI. That is the symbol. Okay. Then the date, the expiration date, the March 18th call, the March 18th expiration date. Which option, the strike price, the $30 call. And then, of course, which option? Was it a call or a put? And so we put it straight out, buy this thing. And we bought it literally at about 3:30 that day. But this is, you can't really see it here and there. But the next morning, the market just took off. Sure enough, it was overbought. it was oversold. Buying came in, and the Chinese government, as I thought they would, came in and boosted their market. This option went up basically 3,000%, 2,900. And when it opened, it was opened up about 1,500%. And I said, no, hold on. This thing is so ridiculously overbought. And the country, I know the government is going to support this. Go ahead and hold on to it. Don't sell it right at the opening. Let's hold on to it. Usually I would say, we got a big gain like that right at the opening. I say, let's just take it right at the opening and move on. Not in this case, because there was just too much going on. So it got up here, it's up 3,000%. So I said, let's take some profits on half. I didn't say take it on all. I said, let's take it on, well, part. I said, I'm taking it on half of my position. You should, but I also said, hold on to another part of it because I still, for the reasons I just mentioned, I think this is still going to go a lot higher. Well, sure enough, at the very end of the day, it got 7,800. So basically 8,000%. I said, people, we can't get greedy here. If it may go up a lot more, but at least I'm going to sell the rest of mine, which I did. You should, and I said you should at least consider selling yours. Now, again, in the chat room, we have a separate page where I put those, not just my entry points and exit points, also when I have some interesting points that I think, if I'm setting up to do something, I'll say, hey, listen, this is something I want to do, especially if it's the end of the day. If I'm thinking about doing something in the last 10 minutes of trading in a day, I don't want to surprise people at 5 minutes to 4 saying, hey, I'm going to do this trade. What? You're trying to type it in and execute the order that quickly. That's too hard. So I say, hey, listen, I'm going to buy this before the end of the day. I'll let you know when I buy it. But be prepared. This is something I'm looking to do. We can talk to why we do stuff at the end of the day later on. But the point is, this is what we did. We had this separate page. You get an alarm that tells you that when a new idea is coming in, and we took that profit. Some people held on to it even longer because they listen to what I said about, hey, the government's going to keep pushing it higher. And sure enough, there's people who called Rodrigo and said they made like 14,000% in the trade. So no matter where you sold, if you sold it all there, or held on a little bit longer, like some people did, either way, somewhere in the middle, like I did, where I made about 5,000% for me. These are the types of things that was literally in one day. And the people who made a little bit more held it for two days. But these are the types of extremes that we're looking for all the time when volatility, as Rodrigo said, when volatility picks up, like we're having right now. I mean, the volatility this week's been ridiculous. We want to be able to take advantage of it. And the key is, and I say this time and time again, whether you're buying, whether you're betting on the upside or the downside, thankfully we have the tools to take care of it. We could have the tools to do it. Now, in the past, we didn't have those tools to make short-term bets. We did have the tools to buy stocks and let them go up. Obviously, it was you could in the late 1990s, people just bought the stock. They didn't buy as much in terms of options, but they made $1 gazillion on everything. That was great, but they couldn't short, because when you short a stock for an individual, that is very, very dangerous. Institutions can do it all the time. But if you short, as I've said many times, if you buy a stock at 20 and it goes to 0, you lose 100% of your money. If you short a stock and it goes at 20 and it goes to 40, you lose all of your money. Again, you lose 100%. If it goes to 45, you lose more than 100%. You've actually got to pay money in. You're going to get a margin call. They're going to say, you owe us money. You got to pay more money in. So it's very, very dangerous to do shorting of stock, especially for individuals. But now we have the tools where we have all of these ETFs, inverse ETFs, leveraged ETFs, leveraged inverse ETFs. And then, of course, we have these options that expire a lot more. Yes, we did have put options that existed in 2000 and 2008, but they were all quarterly options. If you wanted to buy bearish options on right now, you went in today and said, I need to buy, I'm going to buy a hedge. I'm worried about the Fed. I'm going to go out. You would have no choice to buy it but to buy June options. That's the only options you could. Well, you can go further out, but the nearest options you could have bought were the June options on the S&P, and that is 2 months away. 2 months away means you got to pay a lot of time premium, and that makes the options much more expensive. Now, right. Those indexes options are 3 times a week, and in the big cap names, they're every week. So you do not have to pay those big premiums, and you can take advantage of big moves in both directions.
Right. So, I mean, we went over what happened today. Obviously, the volatility is like, that's your best friend. And, here's the thing. Ever since I've been here for like a year and a half, I've been following your trades, Matt. And, you have been the most accurate person that I could recall. Every single correction, you've called it out, weeks before, months before, even the big one when Microsoft and margin debt was going through the roof, and Microsoft, the CEO or CFO sold a lot of stock. You were literally pounding the table on this stuff. And, the good thing is that all your members, all the users of the chat room and, everything else, the newsletters and everything, they all get these commentaries from you. So the chat room is not just trade alerts, but also, commentary on, hey, look, guys, I think the market, is a little bit fuzzy right now. I would probably raise some cash, and that's exactly what you've done during every correction. So, and that's as a trader, right? So that's really good. And I think you've traded before. I know. Do you have some other trades from the prior Fed meeting? Because I think you made like a double whammy where, what is it? You buy calls and puts on the same day or something like that to make money both ways on the
Yeah,
same day.
it was not, it was on the, within a, let me just pull it up here. Well, oops. Hold on one second. Oh, did I pass it already? I'm sorry. There it is. Okay, oops. Okay, now, this was the December meeting of this year. I remember what happened in the December meeting. The Fed had been talking about, hey, we're going to not only going to end QE, I'm sorry, not only we're going to end QE, which we already knew they were going to do, but we're going to start doing QT. In other words, we're going to actually start shrinking the balance sheet. And we're also even going to start raising rates. Just a few months before, certainly during the summer, everybody was saying, oh, they might end QE, but they're not going to shrink the balance sheet until the end of 2022, and they're not going to start raising rates until probably early 2023. Well, that all changed, and they started laying the groundwork for that with all this Fed speak, on CNBC, Bloomberg TV, other interviews, and then they came for the big December meeting, and this is when everybody was waiting for the confirmation from the chairman that yes, indeed, they would be getting more aggressive with their tightening policy. Well, so as we came into it, the stock market had been selling off, and so as we got into this, was literally the day. The 15th was the day of the announcement. Right at 1:30, just before the announcement came out, I said, "Hey, let's get in there and buy some of these QQQ call options. Everybody's pricing in too much of a negative play. This market's going to rally out this news." And sure enough, he came out 2 o'clock. The market rallied. It came back down a little bit, and then at 2:30, Powell spoke at his conference, at his press conference, and the market just took off. We had call options. So instead of just making 2 or 3% as the stock market rallied, we made 360%. The next day, the market gap opened higher. And I said before the open, I spent the first half hour, keep sending messages. Take profits, take profits, take profits. Well, this is, I said, the news is still negative. They're still going to be more aggressive. This is just a buy the news reaction. It's not going to last very long. Let's get out. And sure enough, the top was right before the opening. It's right here, it says 360%. I think we were actually closer to 350, but you can see that in just a few hours of trading, less than one day, less than one, it was the next trading day, but less than 24 hours, we made 360%. However, like I said, and one of the reasons why I took the profit so quickly is I said, hey guys, the news is still negative. The Fed is still going to tighten in a much more aggressive manner. So that's why I want to take the profits very quickly. But it's also, so you can see this is what happened on the 15th. We sold it on the 16th. And the market, as you can see, the market pulled back a little bit. And then it just we did nothing for a couple of days. But then the next day, which was the 17th, on Friday, I started saying, oh, wait a minute, the market's starting to rally here again into the weekend. People aren't feeling good about things. But like I said, this is still negative news. So as we got into the last hour of trading, I said, this market's rallied too much. Let's go in and flip it. Instead of buying the QQQ calls, we're going to flip it and buy the QQQ puts. And we bought the exact, what the asset, the underlying asset, the QQQ, the December 20th was the strike, the expiration date, the strike price 383, and the put option. Sure enough, we bought them just after 3 o'clock. They rallied a little bit into the end of the day. Over the weekend, people kept talking about how negative it was that the Fed was tightening. And sure enough, right after the opening, we let it open. And then right after the opening, we sold them. So in just a couple of days, we went Wednesday, we made 360%. 2 days later, by Monday, and again, this was actually a weekend in between. So you see, it was December 17th. It says down here at the bottom. And then we had the 18th and the 19th were Saturday and Sunday. It opened on the 20th. Same thing. I came in right before the market opened. I said, we're going to make over 200% on this. Let's sell it right at the opening. Now, if you'd held on, you would have made a little bit more, but boy, you wouldn't have felt very good when it was down here, right? Because you would have made your gains would have been cut in half. Again, when you get big gains, you take the profits and move on. Don't worry if you leave something on the table. Don't worry about it. Just move on. Pat yourself on the back.
Right.
So there's a situation where we made it very, very nicely, and I'll just show you that what happened today. And again, the same thing. We might be doing. Whoops! Did I go the wrong way? Okay, here we are. Whoops! I'm sorry. What happened today was I talked about, we bought those QQQ calls. Again, it was about right before 3 o'clock. I'm sorry, right before 2 o'clock, right before the announcement. Hold on a second here. This is getting ridiculous. Hold on. Let me just pull it up here. There we go. Bang. I'm giving everybody a headache by going through those charts. Okay, so again, this is the one I showed earlier. Again, remember, here it is. Just after 1:30, just before 2 o'clock, I went in and we bought the call options, the TQQ. This is May. Obviously, that should have been May. Just a misprint as I was putting it in there. But the May 6th, which is Friday, $40 call option. And sure enough, by 3 o'clock, they were up 71%. I said, let's take some profits. Held on to some others. And as you saw, there were other people who made 160%. That's about what I made on my second sale. I sold close to 170%. But I did sell more than half here, and then I sold a little bit at the end of the day. Now, we did have some other negative calls on, but that was the point. Is that we're trying to do things in a intelligent way, because my thinking was the thing was going to be negative, but I knew I could definitely be wrong. There's just too much volatility. Too much potential for a rally. So I said, we got to hedge ourselves. So so for those some people, they said, I'm out of any negative calls. I'm just buying the bullish calls. They made 160%. For me, what I did is I protected. I cut my losses on my negative bet because I had a nice hit. And that's what you can do in the options market. If you buy the SQQQ and the TQQQ, and the S&P goes up 3%. I'm sorry, the QQQ goes up 3%. That's what happened today. So the TQQQ, which is a 3-time leverage, went up 9%. The SQQQ went down 9%. If you owned equal amounts of both, okay, you just came out even. You made 9% on one and lost 9% on the other. Well, why would you bother doing that? In the options market, it's different, okay, because you're making over 100%. You can make 160%, okay? That means you made the 60%. First of all, you're not going to lose. You're not going to sell the negative bet, the negative options, the put options at a complete loss. You see them for a partial loss, and you more than make up for it with the calls. I hope I'm explaining that the correct way. But the point is, we do that. These are sometimes referred to as strangles or straddles. We don't. In our trading in the chat room, we don't do a whole lot in the way of, condors and all these calls, big put spreads and things like that. What we do are basic puts and calls, and every once in a while we'll do a straddle or a strangle. Now, a straddle is when you buy a put and a call of the same stock at the same price, same strike price with the same expiration. A strangle is one where you have different strike prices. I tend to do those, and I actually leg into them. I'll do one half of it at one point and the other half of it later. But you can see is that because when the market sees a big move, those options, you make so much more on the winning option than you lose on the losing option, that it becomes very, very profitable. So again, I like to skew it to one way or another, to my opinion. And many times I just have an outright. That's why I said, hey, let's buy the let's see here. There's another one I have. Oops, I don't have it there. But the AMD, Advanced Micro Devices, late yesterday, before we knew they were going to report earnings, and one of the people came in. I actually didn't buy them, but we did talk about it a lot on the website, on the chat room, and we said, hey, the AMD $100 calls. This was not from me. This was from one of the people, one of the members of the chat room, and they said, listen, I really like this. The company basically in the last couple of years, it is every time they reported good earnings, the stock is over. I want to buy it here. And I came in and I said, listen, that's not a bad call at all. In fact, I like that call because number one, like you said, they usually report good earnings. Number two, they've got a great prospects on the fundamental side. Number three, they got a great management team. But number four, the stock is down over about 25, 30%, and it's oversold. So if we get any kind of positive news, this thing's going to take off. Well, sure enough, and then when the market opened, I just said, well, again, I didn't buy them, so I just came into the chat room and said, those who did buy the AMD calls, you ought to sell them right away. Just take your profits and move on. It was about 100% profit for those who sold right on the opening. So again, these are the types of, even though I was bearish going into this, I say cautious going into this Fed meeting today. I said, well, but before the Fed meeting comes out, before it can have an impact on AMD, this stock should be able to bounce. We can still take advantage of it, no matter what. Even if the Fed became really hawkish and the market crashed in the afternoon, that wasn't going to affect how AMD opened. It wasn't going to affect how it traded, how it initially reacted to its earnings. So these are the things that that we're constantly trying to do. We don't win on everyone. Like I said in the SQQQ calls, those are down, and we lost money there. So, but the whole idea is to use risk management in a good way. Let your winners ride unless they go up 300% in a day.
Right.
And then, cut your losses on the ones you lose. Have a lot more winners than losers, which we certainly had over the months. I haven't been doing this for a full year yet, but and at least in this chat room. But the whole idea is to risk management. We play both sides. We want to make money in both directions. In 2021, everybody made it in one direction to the upside. That was great because everything was bottom left, upper right. That's every stock went straight up. And that's not going to happen now. The Fed is tightening. We are going to have, and today's meeting, and I would like to go over this because today's meeting was very interesting, very important, but the market's going to have a lot more volatility. We're going to have a lot more corrections along the way. And we want to be able to take advantage of them in both directions. And we have the tools to be able to do that today. Oops. Rodrigo, I lost you.
Yeah, can you hear me?
Yeah, I can hear you now. Okay, great.
So no, absolutely, man. I agree, and it's not just Fed meetings, but you also trade earnings and all that stuff. And I've been getting a lot of emails here from some of the viewers about the chat room. So I'm just gonna go over some of these questions here really quick, Matt, and then we can go ahead and proceed and continue here with the all the Fed talk, Fed trading, what we're looking, all that stuff. All right.
Great.
All right. So these questions again are from you guys that are looking at this either on YouTube or Zoom or I don't know where, but you guys are emailing me about these questions about Matt's chat room, and we're just going to knock them out really quick here. So does Matt go over trade ideas from the members of the chat room? Yes, that's a regular occurrence. Are the, let's see, are the sessions live Monday to Friday? So basically Matt is in the chat room, replying, texting back and forth, entries, exits, all that stuff Monday to Friday. So that's obviously, everything is live there. Does everybody that joined get a free laptop? Yes. Everybody that you have till midnight, and make sure that there's a laptop in the checkout. That way you know that you'll still have one there. Let's see. Can this help me if I trade just stocks, crypto, commodities, forex? Yes, we do have people that just buy stock, people that are swing traders. Matt will go over that as well. Some swing trades we made, so that's fine. Is this for new traders or advanced traders? To be honest, this is like the most simple type of trade that you can make. We're talking about buying a call and buying a put. That is the most simple trade you can make as an options trader. And that is where you can make the most out of the volatility. So obviously we chase volatility, not just with what we're trading, but also with the, market events and things like that, that we are trading. So anybody can trade, buy a call, buy a put. It's not a spread. It's nothing complicated. So good question there, Phil. Next question here. What is the schedule of the chat room? That's Monday to Friday, 9 to 5 p.m. And Tuesdays, there's a session from 11:30 till 12. And that's just for the chat members. And Matt does a full update there on the portfolio, the trades, the market, all that stuff. Reading your comments and chats. It's interactive. Basically, it's like, y'all's time with Matt there. So good question there, Joni. Next we have, is there a money back guarantee? Yes. 7-day money back guarantee. And then next question, what's the price at the renewal? It's going to be the same as tonight. And Adrian's asking how to join. I'll post the link in the chat. But I think we covered everything there, Matt, right? Did you want to add anything?
No, just to say that, on on the Tuesday call, what we try to do is, we do it a Zoom call just like this, and I pull up my charts and we talk about certain issues. I mean, obviously this week we spent a lot of time talking about the about the Fed meeting that was upcoming and some individual stocks. But I would like to just kind of reiterate that we do look at things on the that have more that are more. Obviously, we just told you about the Chinese stock market bet that we made. Can you? I'm just trying to see why I can't see this better than. But I can't get that MACD chart up as high as I'd like. But anyway, here's a situation where we're looking at two right now. We're looking at what's called the UUP, which is the ETF on the dollar, on the U.S. dollar, and see how the dollar got very extended and rallied very strongly over all these concerns. Well, we've got a bet on right now and we're buying some put options in the UUP. So we also do things in the currency market. Now let's see how this is what's called a MACD chart, where you see where a stock will I'm sorry, it's when we've all heard about the death crosses and golden crosses. That's when the 50-day moving average breaks the 200-day moving average. When it breaks above the 200-day moving average, it's a golden cross. When it breaks below the 200-day moving average, it's a death cross. Well, this is very similar, but only on a shorter term basis. The MACD chart is the 9-day versus the 12-day. And you can see how the 9-day is starting to curl over, and if it breaks below that that 12-day moving average, it's going to tell us that the stock is in. I'm sorry, that in this case, not the stock, it's the ETF, but it's the currency is suddenly going to go down. Now, there's a lot of reasons to believe the dollar will continue to go higher on a long-term basis. However, when things get ridiculously overbought, and this thing again, looking at technical analysis, this is what's called an outside down day. I'm going to zoom in a little bit better. And you say, what the heck is that? Well, sometimes when you get a big move, okay, in something, okay, especially like we got, you saw it on the longer term chart, it's just been straight up lately. But look what happened here. You can see that you see this this bar. This is today's trade chart. This is yesterday's bar. You see how yesterday it traded higher than I'm sorry. Today traded higher than yesterday. It also traded lower than yesterday. That doesn't happen very often. You think that might happen a lot. It actually doesn't. You usually get caught in between that range. However, okay, see, sometimes you can trade outside, but this is called day where you go higher than the previous day's high, lower than the previous day's low, and close below that previous day's low. That is a sign that a big move, okay, has that a big move is running out of gas. In other words, it's going, look how strong that rally is right here. Strong. It starts running out of gas. It's sputtering. It's jumping all over the place right there. And then it goes boom. Then it makes a high one day. And finally people say, that's it. I've had enough. It's a sign of exhaustion. The buyers have become exhausted. And this thing is falling. See how hard? That's a big decline. We're looking for more decline over the next couple of days. And even into next week, we have some puts that expire on Friday. If I'm thinking we'll see what happens tomorrow morning. I'm either going to roll them out in the next week, or if the dollar really falls hard overnight, we'll take profits and look at it again. But my point is, we're looking at all sorts of different areas of where you can see this thing. The UUP trades 12 million, 10 million shares a day. So there's plenty of liquidity there. And again, this is something we didn't have in the past. If you wanted to trade, in the currency market, how do individuals trade in the currency market? That was, or if you wanted to try buy Chinese stocks, great. You had to find a broker in Hong Kong or Singapore who would do the trade, do the currency. It was too hard to do that trade. You had to be a big time institution to do that. Now we can. We just go right to the computer, and everything is much more sophisticated, and we can really take advantage of those things. So this is what we're going to be doing. And I just want to talk about what's going on with the Fed right now, because it's the most important thing out there. Well, actually, it's the first most important. There is a second one that we'll talk about that's also very important, because it has to do with the Fed. But the Fed is going from a wildly accommodative policy, but historically the most accommodative they've ever been, and they're in less than a year, they're going from that to a very aggressive tightening cycle. Today, the chairman came out and made some somewhat dovish comments. Basically, all he really did was take 75 basis point hike off the table at the next meeting, or the next couple of meetings. That's great. But guess what? They're still going to be raising by 50 basis points. They're still going to be shrinking their balance sheet by at the same level of expectations that people thought it would be, starting in June and increasing in September. This is a major change, okay? And what the Fed, in my opinion, what the Fed is doing, and it's smart. I mean, I was thinking they might try to, really get, slam the market a little bit today and say, hey, no, we're going to be really, really fight inflation. Well, they did. They're going to say, and this is the right tack, to be honest with you. But what they're doing is like, we're going to knock the market, because they know when your Fed's tightening, every time the Fed tightens, the stock market goes down. You either get a deep correction or a bear market every time. Anybody who tells you otherwise, do not listen to them. I know some people try to say, sometimes, no. Sometimes there's a delay. There's definitely sometimes a delay, but there's always something that happens. And when the market is incredibly overvalued, like this one was at the beginning of the year, the decline comes pretty immediately, as this one has. The thing is, what the Fed wants to do is that we can't have it all at once. Okay, so they talk dovishley every once in a while to get the markets to stabilize, so it doesn't happen. If it happens all at once, then you get a crash, then you get panic, then you get people, runs on the bank runs, and people, deleveraging and forced selling. And as I said, I've said many times in the past, crashes are not caused by a weak economy, poor earnings. They're caused by one thing and one thing only: forced selling. And forced selling doesn't happen from the top. It happens after the markets come down for a while. So what the Fed is doing is like, let's go be 2 steps down, 1 step up, 2 steps down, 1 step up. We've already seen 2 rallies already. This one might be one that lasts for a little while. I'm not sure on that. We'll talk about that in a second. But the point is, we've heard, I don't know if you guys have been listening, some really smart people have been saying that this is really going to be a rough year over time. It's not going to happen all at once. This week, we heard Paul Tudor Jones. Even Jeff Gundlach, it was kind of funny today. He was saying the market can rally near term, but he said, he included himself. He said, I agree with, the 3 people are all in the same boat. Griffin, the head of Citadel, Paul Tudor Jones, and Jeff Gundlach, are all kind of in the same boat, saying that it's going to be a tough year for risk assets. Although Jeff Gundlach did say he was not as bearish as Paul Tudor Jones, but he's bearish. But he does still concerned we're going to have a recession. He just thinks it's going to come later, and he doesn't think it's going to come next year rather than this year, and it's not going to be quite as bad. But Paul Tudor Jones, very, very successful hedge fund manager, billionaire, and he's saying bonds and stocks are a bad place to be, both of them. And then, of course, we had people like Carl Icahn say a couple of weeks ago, say that he looks for a recession or worse. Okay, I don't know what worse than a recession. So we have a lot of smart people who are very concerned about what the Fed is doing. What the Fed is doing is needed. It's going to be painful. The Fed knows it's going to be painful, but they don't want to have it all at once, and that's why we're going to have to stay very, very nimble. Now, what's going to happen going forward here? We want to be looking at some stocks like the Bank of America that we made money in today, like Advanced Micro Devices that we made money in today. We have other names like, Devon Energy is another one we've already made money in, but we also like Netflix. Okay, I'm going to pull this up.
Hey, Matt, really quick, want to give a shout out here to Jerry, newest member. Thank you for joining the family here at the Stock Picks Inner Circle chat room. Jerry, let's go.
Great to hear. Thank you so much. Let me do something here if I can fix this. Good. There we go. Now you guys can see it better. Okay. Now look at Netflix. See how oversold this stock is? See how it was. It's not quite as oversold on its daily chart. Remember we talked about this RSI, Relative Strength Index? See how oversold it got here and it bounced? Well, it's like, okay, well, that's 20%. You buy the options in that, you made a fortune, even though the stock is getting creamed. Look at the weekly RSI. Whoops. I'm going to go daily. Now I'm going to go weekly. Bang. See how oversold this is coming off the most oversold condition ever. If we see the market rally further this week and into next week, and there is a good chance of that, these are the stocks you want to buy. Do you want to buy Apple? Sure, you want to buy some of that too. But the stocks that have been down and out, I'm talking about for short-term trades, for the big bucket, and you really believe Apple is never going to see another down day, that's great. Go into Apple. And you can make money trading Apple on a short-term basis too. Don't get me wrong. But these are the ones that are going to see much more upside movement because they're down the most. Netflix is not a .com company that's going to go out of business. They are facing huge headwinds. And I'm not a big bull on the stock long-term or even intermediate term. But when a stock is this oversold, okay, and I also have things called Bollinger Bands, which is, let's see if I can pull that up. Ticker BOLL. See on the that is on its daily, but let's look at its weekly.
Yeah, and someone is asking if you cover Bitcoin and crypto. Maybe
Oh, yeah, absolutely. We'll definitely talk about that. Yeah, because you can see how this thing is coming up. How Netflix very, very oversold, and we're going. So these are the things that we're going to be looking at in the chat room the rest of this week, and we go into next week if this market pulls up. Now, we're going to be very nimble tomorrow as well, because we have seen several times, where the stock market has bounced really strongly on the day that the Fed has made a decision and announcement, and then reversed rather quickly. And in fact, we bought some in the chat room today. We did buy some SQQQ calls. They say, wait a minute, calls? You're buying calls? That's a bullish bet. Well, no, because the SQQQ is an inverse ETF. So in other words, the SQQQ ETF goes up if the market goes down. So a call option in that one is actually a negative bet. But the point is, we made some negative bets late in the day. It wasn't huge, but just in case that happens. The market has not seen upside fall through in the aftermarket. It's down. The S&P is down about 8 points. These are not horrible. Down at 8. The Nasdaq down 25. Yes, the Dow Jones Industrial Average down 50, but they're down a little bit. We'll see how things go tomorrow. But if we get a big reversal, we're prepared. However, we're going to stay very, very nimble, because we do. There's things called positive gamma in dealing with the general options market, which could cause a pretty sharp short squeeze, just like it did in the second half of March. And we want to be prepared for that. And so we want to take advantage of it in both directions. So I don't want to get overly bearish here when I'm talking about. I'm talking about we're going to have a lot more headwinds along the way. But
when you talk about a short squeeze, you mean like meme stocks or?
Well, okay. I'm going to pull this up, and I'll explain this in a second, because I don't want to forget, because I know a lot of people care about the Bitcoin and other cryptocurrencies. So I just wanted to pull that up while we're talking. But let's talk about the short squeeze. Now, that's what happened with these meme stocks. Big short interest came out, but you also have what's happened is that you saw that the VIX, remember, you saw the VIX move up in the mid 30s again. And that shows that people were getting nervous and willing to pay a lot of money for index puts. They're very nervous. So the thing is, the people who sell those options, the brokerage firms who sell those options, they have to go out in the market and hedge themselves. So what they do is they go out and they either so if they're selling puts, and so they're exposure to a negative bet, they have to short the market, where they either short the S&P futures or buy some S&P puts. Or basically, that's what they'll do. If it's on an individual stock, they'll go out and short that individual stock. And what happens is that so they're hedged if the market does go down, or if the stock does go down. The problem is that if it doesn't go down, it starts to rally, they've got to cover that short. And the higher it goes, the more they have to cover. And that's what happened in March. See, in March, when I'm sorry, that's Bitcoin. But let's put SPX. I don't know if you guys heard about this, but they were talking a lot about positive gamma. And I'm not going to go too much into the details, because it just drive you crazy. It can be very confusing. But see this here, look how strong the market went down, made a new low after this happened. But a bunch of people are going, this doesn't make any sense. And it didn't make a lot of sense, because the Fed was still tightening, Russia was still in Ukraine, China was still having to name all the issues we were talking about. Inflation is still a big problem. Why is the market rallying so strong? It's because of these options players got squeezed so badly, both on individual stocks, especially in the tech names, and on the index options, because so many people had bought protection when the market was really low here. So we might have a similar situation here. And so it's not out of the question. We'll see a further rally. Again, that's why we want to stay nimble. But to answer Rodrigo's question, that's what I'm talking about in terms of short squeezes. It's not just with a meme stock where a bunch of people say this stock's gotten ahead of itself, let's short it, and then they get squeezed. This can happen these hedge funds have huge positions, a huge amount of leverage. And so these short positions can get very, very big and can really squeeze you out. So can really get squeezed to the upside. This is we did not get a lot of positive news right here. Okay, we didn't. If anything, it got worse. and yet the market kept going up for a couple of weeks. So
Right.
that's what I'm talking about. So we have to be careful of that, and we'll be watching for that very, very carefully in the coming days and weeks.
Yeah, I mean, and you really can't talk about the Stock Picks Inner Circle chat room without mentioning the community because, I remember when we started this, Matt, it's just you and me. And, as the folks have been getting in, and, it's just good to see the progress, right? Because this is, it's real, it's live trading, right? And a lot of people really, because it's so simple, what we're the type of trade, it's nothing complex. It's not like you have to learn a whole dictionary of types of trades. It's really been able to help people trade the way they want to do it, right? You pop into the chat room, you talk to the same people, Tammy, David, all the same folks there, very friendly for everybody. Good morning. That's something that like I wish I had when I started trading, just trading with the right community, I guess.
No question, and we have a lot of fun joking around. I mean, everybody, I go out and get a sandwich. Of course, they think I take long lunch breaks, but really, what I do is I'm eating my sandwich. I'm doing more research, but I only take about 10 minutes to get my lunch. But it's just a good community. People care about each other. They're helping each other all the time. Talking about, because we're all doing things during the day. I mean, I'm doing work. I'm watching the markets. I'm keeping an eye on what's going on, and I don't see every post immediately. I go back and read them and try to cover each one. But you can't see them. And sometimes somebody say, well, Matt, this is what Matt said earlier, or hey, I don't know what Matt thinks about this, but this is what I think. Or more importantly, hey, don't worry about this, or here's a good idea. In terms of tactical, here's something. If you're new to this, here are these websites to look at about learning about options trading. The people constantly talking about that. And as I mentioned earlier, the advanced micro devices idea that came up yesterday, where people made over 100% in just a day, that wasn't my idea. I mean, I had been saying, advanced micro devices looks pretty good. It's going to be a great buying opportunity soon. And then somebody said, well, hey, knucklehead, they're about to report, and they usually go up and report. I'm like, oh my God, of course, you're absolutely right. Let's get in it. And there was another one where we did Spotify, and people came in and said hey, I really like this for a number of different reasons. And I agree with them. I said, hey, listen, look at the technicals on this look really good. This could really make it. I said, but you know something? I don't have enough confidence. I know I just had a bad feeling about the trade. Not a bad feeling, but I didn't have the confidence about the trade. If I had a bad feeling, I would have told them that. But I said, no, go ahead and do it if you want. I'm not going to, but it's good. And sure enough, a bunch of people did, and they made 500% when they reported their earnings the next day. I missed out. I was they made money. So, so these, where people are throwing things back and forth all the time. I mean, I don't know how many people traded uranium stocks, but I certainly knew what uranium was, and I knew companies did it, but I didn't know the good way to trade it. Dave, one of the guys on the in the chat room, has been talking about it, and believe me, it's I've kind of let him lead the way on that, and I haven't really gotten involved in it, but believe me, I'm going to, because I'm a big bull. Inflation is going to be with us for a long time, at least through the rest of this year, and I think even after that. And things like uranium are going to be great. There are going to be plenty of opportunities to buy that. Like I said, we've been buying natural gas, we've been buying oil,
Right.
Stocks via lumber, and stocks that are associated with lumber, et cetera. So, and like Rodrigo said, we have people are helping each other all the time, coming up with ideas all the time.
Right. No, absolutely. Absolutely. No, I get 100% what you're saying there. And Falcon on the YouTube asking, so it goes up to the full price 6,000 next year? No, it's going to stay 70% off, which is what we have till midnight. So you join next year, it renews at the same price, Falcon. No worries.
Right. Yeah. If you whenever you sign in, that's the price you pay. I mean, next year you pay the same price.
Right.
If you're somebody else might be paying $6,000, you'll be paying the same price.
Yeah, I mean, keep in mind, you get this deal because I'm here. Just keep that in mind. And the other thing, Matt, so you cover, you trade options throughout, large caps, ETFs, inverse ETFs, like you're all out there on the volatility, trading commodities through everything, right? But you also trade small caps, right? For people that, because you do options, you do crypto, but you also do stocks. What are a couple small cap stocks maybe that, maybe we've discussed in the chat room. Maybe you can show the folks. I know you got MULN, a couple other ones. You
Yeah.
talked about CTRM too a while ago, like weeks ago. So just to show the folks here that we don't only like, it's not just for options. People want to talk to Matt for so many different reasons. It's not just for day trading options.
Oh yeah, absolutely. I mean, and here's again, this is one where we were talking. It was actually Rodrigo. Rodrigo loves talking about MULM because it was his idea, and and it was a great one. So he should be like it. The stock was at 90 cents in here, and I'd heard of the company, I knew about it, but I was not overly familiar with it. And he came in and said, "No, this thing is looking good." Well, it had traded up to 90 cents. So as we get through March, it started trading. I said, "Well, listen, this whole group's acting well. I worry that on a long-term basis, it's going to take the time for these guys to really gain traction. But they have a high short interest in the stock, and you can see if you can break above that that $2 level, it's going to take off." Well, sure enough, it did. And again, when you get a percentage basis, when a stock doubles, just think about what the options do. Okay, the options go up many hundreds of percent, and we were able to take advantage of that. And that's a great thing, is that there's so many people who talk about, well, the way I want to make money is by penny stocks that are going to go up, because, well, that's really hard to do. That's really, really, really hard to do. You can do it for a little bit while. It certainly worked in 2021, but it's, I guess my point is, when you're in these options that we're trading, it's not, I'll say two things. You can still make it in an Apple computer, in a US Steel. US Steel is like the oldest company in the world. And it's not sexy at all, but it can see big moves, and you can make money because now we have weekly options in these stocks. That is very, very, it makes you don't have to go out so far out the risk spectrum that you can't make any money. Another one, Microvision, not MicroStrategy, Microvision. Okay, MicroStrategy is the correct. But here's a stock that is one we've liked a long time. We've made some nice money on it here, but here, the story behind this one is they are in LiDAR technology, which laser radar, which is very good for self-driving cars, for self-driving robots, all sorts of things. But a lot of things that a lot of people don't realize, they also have the screens. They've got the new screen technology for smart glasses, so that people don't have to wear those crazy glasses. They'll be able to wear glasses that look normal. And as Tim Cook has said many times, this is one of the things for the future is smart glasses. The first iteration didn't work so well because they all look like 1950s sci-fi glasses or 3D glasses from watching a 3D movie in the theaters way back in the day. So they have the things that are there. And so again, this is one we've made some real nice money in as well. So we look at all areas, small cap, large cap. And the other thing that I want to say is very important, because the guys at Berkshire Hathaway, and Warren Buffett and his vice chairman there, who really suck. Things are getting crazy in the individual traders, and that it's not good where these brokers are going out and they're getting people to trade really aggressively, and they're just making money off of the fact that these people are trading. Well, I don't do that. I am an aggressive trader. I'm not doing 100. Some people, geez, they trade 20, 30 trades a day. I don't do that at all. Do a couple of trades a day. And then other people in the chat room will do several trades a day. But the point is, I make money if I lose money, you lose money. I'm sorry, take it away. If you lose money, I lose money. Okay. So at least I put every trade in there. I don't just put, some trades in there. If I'm doing a trade, I do have a long-term, where I buy a stock and hold on to it for several years. That's a bucket that's a different bucket. And if I buy something in there, I will certainly let you know. I'll buy or sell something in there. But on my trading account, you get on all my trades. I don't give you some of them. I give you all of them. And I don't give them to you in a delay. I buy them, hope it goes up, and then tell you about it later so you can push it a little bit higher so I can take it out a nice profit. No. When I buy it, you know about it. When I sell it, you know about it. If you make money, I make money. If I lose money, as you lose money, I lose money. So I don't get any commissions off of the trades. Okay, so that doesn't win for me. Okay, so and I do agree with those guys that it's gotten too much. But and if people are telling you to go in and buy these penny stocks all the time, some of them might be a great idea. But if you're buying a lot of them, that's just gambling. That's just going to a poker, you're just guessing. We're trying to make educated decisions based on fundamental analysis, technical analysis, sentiment, and positioning. And it's much more than just trying to scalp a few pennies here and there. We're looking for, and again, we can make some nice moves because the market is so volatile. It's going to continue to be volatile. Like I said, going back to what we were talking about with the Fed, they know. Okay, good. I was just make sure my computer was plugged in because I was low battery there. But they know that they're creating headwinds because it always has, always. Okay, and don't fight the Fed. There's a reason they say that. Some people believe me. If the market rallies over the next couple of weeks, they'll say, "Don't fear the Fed," and the perma bulls on TV will try to claim that they were right, even though they've been wrong all year. And they'll say, "Okay, they were right this one time for 2 weeks. That's great." The point is, you should fear the Fed. I mean, because it's not calling for the end of the world. I'm not a perma bear. I'm not saying that in 2000, like we're going to have a repeat of 2008, where the market was down 50%. I'm not saying 1999, 2000, when the market tops and goes down 80% in the NASDAQ. I'm not saying that. What I'm saying is that the Fed has gone from an extremely accommodative stance that has taken the stock market way higher than it should have. And even though a lot of people think that they gave justification for it, now that they're removing that liquidity, the valuations, even if we don't go into recession, the market had to come down. It's already come down some. I think it's got to come down more. But the real thing is the big change has been Russia invading Ukraine, and it's not getting much notice lately because not as many people are dying. Thankfully, there's war still going on and people are dying, but it's not quite as big as bad on the humanitarian side of things. Even if they get a ceasefire agreement, okay, then the market will probably rally off that. That's not going to last very long because they are not going to remove the sanctions. If they go ceasefire, the only way they're going to remove the sanctions is Putin goes. Okay, and it sounds like there's a lot of people think that he's actually going to declare full control of a couple of those provinces in eastern Ukraine. But the most important thing is the sanctions are not going to be removed. Therefore, oil is not going to come out of Russia. The food issue is not going to come out of Russia or Ukraine. And even if Ukraine plants some, it's too late to plant a kind of crop that's going to be a bumper crop, okay, in Ukraine. If they go ceasefire tomorrow, okay, that's not going to happen. And so we are going to have higher prices, period. For oil and food, for all the supply chain issues, which was the initial reason for the problem with inflation. Okay, that's going to last longer because the sanctions aren't going to come off. They're not going to come off this year, basically. Okay, so all those prices. People say, "Oh, we have the oil, we have natural gas, we have food." It's like, no, they don't. They actually don't. They have enough to make sure people don't freeze to death. Okay, but there's not enough supply without Russian gas, oil and gas. So even if they get enough to put into Europe without using Russian oil and gas, they're going to have to take it from somewhere else. It's not like they're going to say, "Oh, well, we're going to have to take it from Asia." They want to take it from the U.S. because we have our own sources, but maybe look at some of that. But the point is, right, the global situation will still keep prices higher. The Fed is going to have to continue to fight inflation, and either way, stagflation is very high probability, which means earnings are going to come down, the stock market's coming down. Let's take advantage. Let's, instead of being afraid of it, let's embrace it. Make money on the way down. So when everybody else is finally panicking and finally throwing in the towel and selling, we're going to be the ones buying because we've made money on the way down and really be able to take advantage of it.
Yeah, and I remember when we had a session here, I think it was many months ago, and I asked, do you think inflation is serious? And a lot of people didn't take it seriously and all that stuff, and it's something that could happen, right? So that's really the thing, right? You do have an open mind for all these things, and so the other thing here, Matt. All right, so we've talked about the situation there with the Fed, right? We gave it a good time there. What are your thoughts right now? There's a lot of chatter in the housing market that something's shaken up there. You're Mr. I mean, you know everything that's happening in the markets. So what's going on there, man?
Well, look at this here. Look at this is the ITB, which is the home construction ETF. One of the things that, I understand why these stocks came down because interest rates are going up, but and people are starting to worry about, because the prices are through the roof, that there's this major housing bubble. Well, I mean, the prices, yes, the prices have gotten outrageous. But when you have a bubble, it's because there's way too much supply. I mean, eventually it gets so much supply that eventually the thing collapses. There is still a massive undersupply of houses in the U.S. People are paying ridiculous prices for houses, but they're not buying them for second homes that they want to flip next week. Right? They're buying them because they're going to live in them. And the thing about inflation is what works best during inflationary timeframes? Hard assets like gold, like homes, like commodities. And that's why commodities. I've turned bullish on commodities 2 summers ago, almost exactly 2 years ago, and for a lot of these reasons, because I saw inflation coming. Now, again, a lot of the thing has been exacerbated by other issues that have made it even bigger. But the point is, in the 1970s, home prices, interest rates, buy a mortgage, it was 15, 16%. Some people even, I think, eventually had to pay 20%. And yet housing prices still went up. Why? Because people wanted hard assets. Now, again, if mortgage rates go to 20%, I'm not getting too excited. But the point is, here we are with a group that down. It's formed a very, very nice base here. And it's starting to break out. Now, today was one big move. We got to make sure we get a little bit of a follow through instead of just a short squeeze. But this is one of the reasons why I like it. LB1 commodity GP. Remember, I just showed you how I'm sorry. Let's see here. How the ITB housing construction ETF had been forming a nice base. Well, look at this. We're already seeing a little bit of a rally in lumber, and home prices. Home builders tend to trade with lumber. Now we'll need to see more upside follow through on this to get really excited about it. But if we get that, and we get the ITB, remember we talked about the this MACD chart, MACD. Okay, look at how this is starting to pull up. Okay, this is the kind of things that we look for confirmation. See how it got up to its, well, you can see this yellow line, that's the 50-day moving average. It got right up to that line and failed back in March. This time it's breaking out. We need one more day or another day or two to make sure that this is confirming. But this group could really go. And then we'll be looking at not only the ITB and options of the call options in the ITB, but we'll look at Home Depot, Lowe's, right, and Pulte Homes, the other home builders. So there's a lot of plays to play here in this group.
Right.
I can't hear you there. I think you're.
So good stuff there with that. And so what is your take right now, Matt, on the cybersecurity space? There's a lot of chatter that, this is the next frontier, right? Like, WW3. So cyber. So what do you think overall long term with this overall sector? Is there a point investing in these stocks?
Yeah, I mean, you can't. You got to own these. I mean, I shouldn't say that. Stocks can get sometimes there's a difference between how good a company is and how good the stock is. Sometimes the stock gets way ahead of its underlying fundamentals. I mean, we all know. I mean, even last year, Apple Computer, best stock in the marketplace, saw 5 or 6 pullbacks of anywhere from 9 to 20%, and yet the overall market just kept going up and up and up and up and up. It's like, well, wait a minute, Apple went down 15% one time, a couple of times. Didn't the market go down? No, it just kept going up and up and up. So, and of course, Amazon, which changed the world over the last 25 years, it did go up in a straight line. It saw many, 24 corrections or, bear markets, if you want to call it, the moves of drops of more than 20 to 60%, 24 of them. So nothing moves in a straight line. And because sometimes stocks get too far ahead of their fundamentals and they have to come down. In cybersecurity, the same thing can happen, and it will happen over time. But there's nothing more important than cybersecurity right now. I say nothing, of course. We all care about our lives and our families, but it's with more and more stuff going in the metaverse. Well, the metaverse, whatever and on the cloud, whatever, you need that cybersecurity. And we'll just look what happened. People have lost they lost a lot of money in Bitcoin and things. That's a different issue. When smart people can steal this money from you, you've got to be able to protect yourself, and more importantly, businesses have to protect themselves. And we're coming out of this pandemic. We're still getting a lot of small business formation, even though the economy is probably going to slow. It is slowing, and will slow down this year, whether we have a recession or not. We're still getting a lot of new businesses, small businesses. They all need cybersecurity. So I'm not fighting that trend, that's for sure. But again, like anything else, you have to be careful. When you get too many of them, just like there were too many railroads in the 1850s. There were too many dot-com companies in the late 1990s. You got to be careful of that. But cybersecurity is it's not the wave of the future. It's the wave of today. But it's also going to be important in the future as well.
Right, interesting there. And overall, what do you think about EVs right now? Do you think those are about the overall sector, about green energy, that sort of stuff?
I'm sorry, about what? I'm sorry.
Like green energy, that sort of stuff.
Yeah, I mean, we just have to be careful on this. Everybody, of course, cares about Tesla, but they're the leader, and so if you get any kind of concerns about it, you're still going to own Tesla. Some of these other ones you have to worry about. And the reason is that there are still a lot of companies that aren't making any money. There's no question that we are going to get there. I mean, there was a guy today saying we're several years, we're 10 years away, or at least 5, really 10 years away from self-driving cars, et cetera, for people, full self-driving cars. EV, of course, is going to be very important. And when I went to college in Maine, and I love the state of Maine, the people in Maine are so great. And sometimes you say, you can't get there from here. And it was the old saying up there. And you were going to get there, but you can't get there in a straight line. And we can't get where we want to be tomorrow. And it's going to take longer than most people realize. Just like this whole thing. I mean, one of the reasons why I turned so bullish on the energy stocks was when I realized that all these people were saying, why buy fossil fuels? They're dead. I'm like, no, they're not. This is what I did in October of 2020, a year and a half ago. I was saying, we can't get there from here. We can get there, but it's going to take a lot longer. It's going to take at least a decade. At least. Most people, experts say it's going to be closer to 2 decades. So to think that we're going to go away from fossil fuels tomorrow is not going to happen. So be a little careful. I do like them. The best ones, you just have to, obviously the ones, be careful. But and this is one of the things that's so great, is in these names, the ones that work are going to do well, and it's going to do well over time. You can buy options in the names and call options and such, but you can buy these names if MULM works, okay, at $2. It's a 100. It's $1.20. I mean, this stock's going to be $100 stock someday, okay, down the road if it works. Okay, so why do you really need to buy the options? You can put money into it here. It's right now I'm a little concerned about the stock just because it became a meme stock and it's kind of fluctuating. But my point is that whenever you buy a stock like this, or any stock, if it goes down 10% from where you buy it, get out of the trade. Get out of the trade, okay? Doesn't mean that you walk away from the company. Just say you've just realized you've lost, you've entered at the wrong time. Find another entry point. If you firmly believe in it, you really love it, still walk away for a while. That's what the biggest killer. And if you say, oh, I lost 50% of my money on this one bet, I thought for sure it was going to work. It's like, that should never happen. You get down you get down 10%, get out and move on. Okay. Now again, you can buy down and if you bought, what's your average price is? If you bought a little at $5 and a little at $4.90 and your average price is $4.50, then use that as your 10% thing.
Right.
And it doesn't work, get out and look for another entry point down the road. It can still work for you. And that's where my thinking is. I'm just right now on the EV stocks. I'm being a little careful on those. I think we're going to get a better opportunity later this year to jump back into those names.
Interesting stuff there, Matt. Now, let me ask you, what do you think about the energy situation? A lot about Ukraine, not just Ukraine, but like Russia cutting off some places from natural gas. Some of that, like, I don't know if that's going to impact, that could impact Europe. If they could go into recession, maybe that can impact us here. I know that you're a global strategist and you look at the global markets and you look for volatility wherever it is. But from a general perspective, right, where do you see all that going? Where could it go? What kind of scenarios do you see could play out there with the energy side?
I am still a bull on the energy sector. As I said earlier, is that when the market got down, I'm sorry, when oil, let's see, I'll pull up natural gas too. When oil got to $130, I said, okay, we got to walk away on a short-term basis. The long-term pollings, go ahead, hold on to them, okay? But short-term, they got ridiculously overbought. Same thing happened here in natural gas, okay? It's already gotten back to that. But here in the middle of April, I was saying, no, we got to avoid it. That didn't mean I didn't like them. And I've been very adamant, said very adamantly, hey, I still love these things long-term. Do not dump them. Just don't chase them. And so people were able to come back in and buy them down here. And now, again, it's overbought, but it's not as overbought as it was before. And same with crude oil. It's not overbought. But going back to what Rodrigo's asking, we do not have the capability to get this stuff out of the ground because we have not, and I'm talking about the whole globe, has not spent the money, have not invested the money in infrastructure to get this stuff out of the ground. And even the IEA, we all want to move to clean energy as fast as we can, but it's just not possible unless something new comes up. I mean, something that nobody knows about right now. It's impossible to get what we need to get prices to go back down, to get things flowing. I mean, OPEC, say, oh, well, OPEC will finally just turn back on the spigots. They don't have the capability. Nothing has been upgraded for years, okay? We don't talk about why that happened, but it has happened. Blame politicians, non-politicians, whatever you want to blame, but that's happened, okay? And like I said before, if Germany Europe cannot survive without Russia's oil and gas. Next winter, they will freeze to death. I'm just telling you that. I a lot of research on this. That's what will happen. Now, that's not going to happen because they'll get it from somewhere. Either they'll get a deal with Russia, or they'll pull some of the sanctions off. They'll try to do something, but they ain't pulling all those sanctions off. They'll get it from somewhere else. But those oil prices, we're not going to get enough supply. We'll get enough supply to meet demand, but it'll be at very expensive prices. Okay, that's going to be negative for Europe is going into recession. In my opinion, I think the U.S. is likely to go into recession, not 100%, and may not happen until next year. But I think the odds are high. Europe, this situation with Russia is something's going to have to change. Now, I will change my mind if the situation changes. But right now, this is something. Again, inflation is a problem. Hard assets like commodities. So that's good for oil, natural gas, other commodities. That's why you want to own these stocks. That's why I like the agricultural stocks, like Archer Daniels Midland's a stock I bought a year and a half ago. It's a boring stock. It's up, it's doubled. So it was a boring company, you'd think, but it's been a great stock. So we are going to be in and out of them. We're not going to be in and out. We're going to be mostly in, and we're going to take advantages once in a while, like we did twice already, is that we backed off and let the stocks come back down to us, taking some profits. For some people want to take some profits. Some people might have made some short-term negative bets by buying some puts. But overall, this is a sector you want to be in. This is a beginning of a cycle, and it's not just it's a secular bull market, not just a cyclical one. And like I said, inflation is going to be with us for a while, so we want to continue to buy these stocks, especially the really good companies like APA and Devon Energy and Chevron that have good managements. You don't have to buy the small little company nobody's ever heard of to make some good money in those energy sectors.
Right. So, Matt, we've been looking at all the earnings come out from Facebook, Netflix, Google, all these like consumer oriented kind of companies, right? And you have well, I mean, how do you feel about the consumer right now with all that stuff, especially considering what happened with Amazon and their earnings? Do you think that's a sign? How should you take it? Do you look at it? How do you look at it at all?
Well, I must admit I'm worried. Now, something I'm going to, excuse me for a second. I'm going to just look at something here because I have my little cheat sheet because I want to put this up. See if I can find it here. It's because I don't look at it every day, and it's a big long thing on the savings rate in the That's not what I want. Let's see if I can find it here.
It's like a 9-year low, something.
Well, the same, yeah, exactly. Everybody's saying, well, the balance sheet is that the consumer is in the best, their balance sheet's in the best shape ever. It's like, well, it's not because they've saved a lot. Savings rate is back down to pre-pandemic levels, okay? Back down to near lows. But the balance sheets are good because what? Number one, their housing prices are way up. But that's great. But you can't sell your house. You know, let's say, well, geez, I'll sell a part. If you own shares of a company, you say, well, I'll sell some shares so I can meet my mortgage payment, or I can pay for. You can't do that at a house. You can't say, well, I'll sell the chimney so I can make, so I can put food on the table. You either sell the whole house or you don't, and you got something. You got to live somewhere, right? So those aren't liquid assets. And the other thing is the stock market. And if the stock market comes down, that situation is going to change very quickly. So the savings rate is very, very low. I just want to see. Oh, there it is. Let me pull it up here while I have it, and just to prove it to you. PIDS. See how everybody got scared? So the savings rate shot up. Whoops, shot up during the shoot. Well, in 2020, right? Look at it. It's back to pre-pandemic levels. It's back down to 6%. It's not high at all. Okay. So the other thing is, with 64% of Americans, 64, it's up to 64% now. 64% of Americans live paycheck to paycheck. All right. So inflation is not going to be helpful. Right. What we have right now, there's two things going on. And I know, again, I want to sound overly bearish, but overly cautious here. But number one is we had all this pent-up demand. We had another winter and people were like, get me out. I don't care if it costs me $1,500 to fly to Florida for vacation. I've got to go. I've got to get out. I've got to get out to dinner. Okay. They're paying the next day because of all this pent-up demand. But at some point when people continue, and I cannot tell you how many people I've talked to, whether it be institutional customers, friends of mine, people in the chat room talking about, oh my God, I just got my oil bill. They just filled up my home heating oil. Oh my God, I can't, it doubled or went through the roof. And I went to the grocery store. All I did was get a couple of basics, and it's $100. I mean, at some point people will say, okay, I had some pent up demand and I needed to get out and spend it, but geez, I gotta, and if you're living paycheck to paycheck, it's like, hey, I'm going to buy less because I got to make sure I make my mortgage payment or my rent payment or put food on the table for my family. They'll have to spend less on other things. And once that pent up demand goes down from the winter, it's going to be a tough road to hoe. And the other thing, of course, is that some businesses know the prices are going up, so they've been stockpiling. They're building up their inventories because they know they don't really need all of that until next fall, but they know the price is going to be higher next fall, so they're stockpiling. This is a real fear for me. People are talking about inflation is going to come down. They're right. Doesn't matter. Jeff, I mean, it's something I've been saying for weeks, and Jeff Gundlach talked about it today. He said, yeah, it's great that we're not going to have 8% inflation anymore, but it's going to, by the end of the year, it's still going to only be 6%. That's still way too high for the level of interest rates we have today. Okay. So the Fed's going to have to raise more. Interest rates are going to have to go higher. And that's not good for the stock market. So again, it's going to be leaps and bounds, but it's just common sense. So many people thought, oh my gosh, the market always goes up. Just read any history book. It doesn't. Okay. We have these tough times, corrections, bear markets, deep corrections, et cetera. They're normal and they're healthy. But now we have the opportunity to take advantage of them, and that's what we're trying to do in this chat room. And it's been working out very, very well. It's just something that I think people. So the consumer, I'm not as strong as consumers. A lot of those people, a lot of those people on CNBC, the guests on CNBC, the reporters are just doing the reporting, and they're doing some great interviews. But they bring on the experts, and those experts who work at the Wall Street firms, whether they be money managers or brokerage firms, they are paid to be bullish. So of course they always paint the bullish picture. That's how they get in money. They're salespeople. They're doing. I don't care about my Miller Tabak. I'm the strategist for. They say you say whatever you want. That's what I love about the job. And Benzinga is the same way. And so I'm just telling you what I see out there. And for the consumer is when you have higher inflation. I mean, how can it not impact? Because and the thing is, it's not demand-driven inflation. And when you have demand-driven inflation, okay, people make more money, So they don't mind paying the higher price. They get a better job, they make more money, etc. When it's supply driven, that means there's just a lack of supply. The price goes up, and you're still making the same amount of money, or you're still out of a job, whatever it happens to be. Okay. It costs you more. That means it costs me more for my basics. I've got to spend less on my non-basics. And that's why stocks like Clorox and General Mills, I mean, you know, people still need to buy their laundry detergent. People still need to buy their food. I mean, those stocks are acting just as acted really well today and going into this, because people are worried. It's like, yeah, I know I got to own tech stocks, but I know inflation is going to have some problems, and people are going to spend a lot more money on their essentials than they are on other things. And so the consumer is a concern for me, especially when 64% of the population lives paycheck to paycheck. The other thing, I think maybe the biggest thing for me, and it's just one company, but we've seen, like 2021 was the biggest one, I think it was the biggest year for insider selling in the stock market. And people saw what was going on. They realized that the Fed was going to start changing their monetary policy. So there's no way that the market could continue to rally. Could continue to hold at the high valuation level it was. And again, for those of you who see me before, I've said this a million times, always follow the insiders. What are the insiders doing? Company buybacks is not insider buying, okay? Now, company buybacks are good, especially, but when they get to extremes, like they did last year, we're starting to come back in this year, like they did in 2000. 2007 was a record year for stock buybacks at the time. But guess what? The market still topped out. So be careful about that. But the point is, insiders much different. Insiders sell small for a million different reasons. They want to buy a new house, a new vacation home, they pay for their kids' college, whatever it happens to be. But when they sell big, that's the sign of the top. Microsoft, one of the best companies in the world, and the CEO sold 2/3, $374 million worth of stock at Thanksgiving, right around Thanksgiving in early December, right at the top. I mean, you don't sell that much unless you're worried that the valuation is going to go down, because he knows his business is fine, and he runs a great business. Mr. Nadella is a great CEO, and he runs a great company. He's turned Microsoft around again. They're back to being at the top of the world, top of the heap, and they will continue to do well. But their stock was up 33%, averaged a 33% gain for 9 years, the last 9 years. Why would you sell if you thought it was going to go up another 33% or even another 15%? Forget about this tax increase. You know, they increased taxes by 7%. It's the worst year they've had in the last 9 years was up 9%. He would still make money. You don't sell your stock that kind of size. That's just what Goldman Sachs did. You know, people have heard me say this a million times, but it's so important. And whether it be, you know, it's happening now, you know it if you're young, remember this as long as you invest, as long as you live. When insiders sell, it's a sign of a top. Okay, Goldman Sachs, one of the really smart ones. Goldman Sachs they sold their company through an IPO in 1999. What happened in 2000? The market went down. Now, they still held on to shares, just like Mr. Nadella, the CEO of Microsoft, is still holding on to his shares, okay? So holding on to some shares, or a decent amount of shares. And he will get more shares in part of his pay every year. So I'm not saying, oh my gosh, forget Microsoft. But Goldman Sachs, they have been a private partnership for 100 years. They sold out in 1999, and the next year the market collapsed. In 2007, Blackstone, Brookstone is a retailer. Blackstone, the big PE firm, one of the best. They have been private for 25 years. They went public. They sold their stock to the partners sold their stock, sold a big majority of their stock, or a big piece of their stock to the public. And in the summer of 2007, 3 months later, the stock market topped out. They saw it coming. Glencore, the biggest commodities broker, one of the biggest in the world, they did the same thing in 2011, 2 months before the top and the bear market began in commodities. Now, these guys are smart guys. They sell at the top. Sam Zell, the big real estate billionaire, sold his company, and right at the top of the real estate bubble, and back in 15 years or so ago. He loved this. His whole life was that business, and he sold because he saw that it just got ridiculous. Mr. Nadella sold that stock. He saved himself $75 million by selling what he did, and you don't do that because you're worried about a 10 or 20% correction that's going to last a couple of months. You worry that because the stock's going to go down and stay down for a period of time, a year or more. And again, it doesn't mean that the stock is going to go down for 2 years, but it's likely not going to get back to its old high for a year or two, or for at least a year, probably 2, or maybe even more. It's what the smart guys do. It's what they've always done. It's always been an unbelievably great indicator. It worked really, really well for me this year and helped me call for the top in this correction of the bear market. So I just wanted to touch on that. We'll look for more. If we see more people do things like that, we'll use it as a concern. But Microsoft, great company. Nothing wrong with buying it for the long term, and we'll buy it. There'll be some great opportunities to buy it for some pops along the way. But again, when the smart guys sell big, if they sell small, it's no big deal. They sell big, it means something, and that's what we have to worry about. Anyway, so what we're go ahead, Rodrigo. I'm sorry.
Yeah, well, and okay, no, interesting. And you go over all this stuff in the chat room where you're live trading, basically through the entire day, Monday to Friday. Now you're trading through Fed meetings, right? This is like your favorite time of the year. You trade through earnings, right? So any volatility that you see outside, and which is really what you're looking for, right? For the type of trades to make those type of gains, right?
Right. And also try to look where nobody's looking. I mean, that's what we did with the FXI. Another one I did was last year. I had one where we made 5,000% in Viacom. I made 2,500%, and it was Viacom became so overbought. I said we got to come in and buy the puts. It's ridiculous. It's RSI got to 90. Sorry, it's RSI got to 95. It's weekly RSI. Bought puts. Next day, 2 days later, we're up 2,500%. By the next day, we're up 5,000%, and some people even made as much as 10,000%. At least they said so. I can only say for those the 2,500. But you look for things that people don't notice, like the FXI, like the UUP. I think the dollar is very extended here. So we look at all those things. When we see things that are coming, we know it's going to be a volatile event. We take care of it. Then we look for other things that nobody's looking at. And see that, hey, we've got a big chance for a big reversal here that's going to turn a very unvolatile situation into a very volatile one, and we try to take advantage of that as well.
Yeah, and I've even noticed that, like, even in stocks like Tesla, you've been able to successfully short it, go long it, trade in and out of it,
Absolutely.
and several times.
When you get a stock that's that volatile, I mean, it just happened just recently here. Now, let's see here. Okay, right here. It's going to get rid of a couple of lines here, so it makes it easier for you guys to see. Now, the stock, I want to get that and that. So see now here, this is the 100-day moving average. This green line here is the 100-day moving average. And see how it bounced along this thing. It just kept holding and holding and holding. It finally got to here. I said to people in the chat room, if this thing breaks that 100-day moving average, it's going to fall out of bed. You should buy some put options. And sure enough, the stock did fall. People made, again, depending on the person, different people bought it at different times and sold at different times, but people made over 100%. I think one person made 80%, other person paid 150%, whatever, in this decline. Now, so what we're going to be watching in the next couple of days, one of the greatest old rules of technical analysis is old support becomes new resistance. Okay, so it was old support. Now it got right to that number today and stopped. Well, that doesn't mean it can't break out because the market closed and the rally all came at the end of the day. And it closed right on its highs. So I'm not worried about this. I'm not saying, oh my gosh, this looks like a failure, but I'm going to be watching to see, again, whenever you break a support or resistance level, it has to be a meaningful break. It can go a few pennies or even, depending on the price of the stock. This is going to have to go a couple of dollars above it before you can get really excited about it. But if it breaks above it, it is probably going to run. And believe me, we've made back here. People thought it was absolutely nuts to say. I said this stock. I think the stock's going to go down. I think it's going to blow 1,000. And some people in the chat room. Well, I think the person left. He was so mad at me. But I was like, I'm not talking about the long-term prospects. I'm not saying Musk is a genius. I said, I'm not saying he's not. I'm just saying that this is an incredibly volatile stock. and we can take advantage of it on both sides. And we made some really nice money. And then again, when it came down here, it got down to 900 and bounced. We turned positive there. So we've made money on both sides of this one. And the most recent one was right here on the negative side when it finally broke that 100-day moving average. But like I said, tomorrow, now again, it might pull back a little bit. That doesn't mean the end of the world, but I'm going to be watching, see what does it happen? What does it do? What does it do? Does it finally break above it? And then we're going to jump on the calls. If it breaks back below today's low, which is, way down here, but it breaks down, it's going to drop to 800 quickly. And so this is going to be one we really like to trade. The options are expensive because it's a $900 stock, but it's because it's such a volatile name. And it's one where, I say it's not easy to make money, but it's one we've been able to successfully make money in both sides in the last, really in the last since we started. So certainly in the last 6 to 8 months. So so we're constantly looking at all sorts of different ideas, and why not go back to the well where stocks that are really volatile? You go to other stocks that are just boring stocks that don't move much. You see great opportunities every once in a while when it gets really oversold or really overbought, or their earnings, suddenly the fundamentals are looking really good or suddenly looking really bad. But that might be a one-off thing. We don't trade the stock for 6 months or a couple of years. This one and these stocks like it are ones that you can trade in both directions many times.
Right.
And don't always get them right. Sometimes we've been wrong and lost a few dollars before we got out of the trade. But this one's been one we've done very, very well. And like I said, we'll be looking to do another trade at some point. Again, it may not happen until next week. We may not get that break. May not happen until next week. But this is one that's probably going to do real well. We'll be making a couple of trades in this one in the month of May, and I think they'll be profitable, just like it was in April and earlier this year.
Right. So I guess we can look now at this other stock that I know you've been looking at as well. I know that you might have looked at it, CTRM.
Oh yeah.
So they're also considering they're in the shipping and for dry bulk and all that stuff. Where do you see that whole, because they are in commodities, which kind of goes with inflation and all that stuff. So kind of wrap it all up there for us with that one.
I mean, here's the thing. So on the fundamental side of things, these guys sell ships, or sell ships. They rent ships. You can rent a ship for a year. You can rent it for one. Again, and it's not people, we're not talking cruise ships. We're talking stuff that carries iron ore and coal and stuff like that. And since I'm a big bull on on commodities, I think this is going to work very, very well for them. And they have added a huge capacity to the number of ships that they have. And they're like anything else. And when a company, it's almost a country, when a company, they have their own ships, but they're constantly, it's kind of like a moving company. Every once in a while I said, wait a minute, I bought I rented from Mayflower Moving, and this big white truck showed up, or I've got two trucks, and one of them says big Mayflower on it, the other one's just a big white truck or black truck or whatever. And you sit there and you say, well, that's because they've all of the trucks they have, they don't want to have too many trucks. They'll just rent them as they can. And this is what CTRM has started to do, and has been doing for a couple of years now. They're a relatively new company, but it's just they are the U-Haul or rental car. I mean, you can just do it for one job. Hey, we need one boat for a while. Sometimes they they can just provide the whole shebang. But sometimes it's just, hey, here's the ship. It's all yours. You stock it, you fill it, you hire the people to sail it, and but that's what they do. So it's a kind of a plain. It sounds like an unsexy business, but boy, when you have a situation that we're facing right now with all these supply chain issues, and now it looks like these supply chain issues is going to last for a while, for a long while. This is a good business. And on the fundamental side, look at the technical side of things. It's been it's been kind of a nice little rally, and it's just been nicely moving up, nice and slow. And I like that, because these meme stocks, sometimes they get too much. But see how we have that 50-day moving average? That's what this yellow line is. 50-day, bounced off it there, bounced off it there, bounced off it there, bouncing off it there one more time. And this makes it an easy one to look at. You buy the $2 stock, but if it breaks below its 50-day moving average is $1.85, you get out of the stock and you look for another entry point. But if this thing makes a new high, it's really going to run, because that's when the momentum players will really jump in. Now, this is a bar chart. I'm going to give you hold on here. This is a chart that gives just the closing levels. So here's a stock. I want to be buying it now. I'm going to use that 50-day moving average as the boom. There's the let me take. Sorry, I just want to take away the 100 and 200. So again, you buy the stock now. You use the 50-day moving average, which will change. But right now it's $1.85. Use that as your stop out price. In other words, your stop, it gets that level, it gets below that level, you're just going to sell it and take the loss and move on. But what I do is you buy a little bit now, and then if it breaks above this level, giving it a key higher high, nothing better. So we've got a nice higher high there, higher low, higher high, higher low. Let's get another higher high, another higher low. Looks like if we go a higher high above that, boy, these guys are really going to jump on it. And that's when you're going to add to it. So the stock, the old high is 240. You get to above 240. So you buy some now at 200. I'm sorry, 200 at $2. You buy some at 240. Your average price is 220 or whatever, depending on how much you buy at each level. Well, that's great. Now you move your stop out level to 220 because that's your price. Now you're guaranteed not to lose money, right? I mean, obviously you can, they may have some news and the stock could gap down in one day, but for the most part, so don't be afraid to add to winning positions as they move higher. It's one of the key things. Way too many people say, I bought the stock and I should have bought more and it got away from me and I just stopped buying it. Why stop buying it? I can understand why people stop selling it, to stop buying it on the way down. Okay. Because all you're doing is adding to a losing position. That's smart. That's not smart at all. I mean, it's one thing to add. You buy a little bit here at 209, you buy a little bit at 205, you buy a little bit of 190. Okay, fine. It drops below 185. It's like, no, don't keep averaging down, because at some point, it's 2, and you buy it at 2, and you're still buying it at 1. Your average price is 150, but it's trading at 1. Now you're just relying on hope, and that does not work. That's a losing thing. Cut your losses. Get out. Look for another entry point at some other time. But this is the one I like. I like it fundamentally. I like it technically. And if we break above that 240 level, I'm really going to like it, because it's going to attract a lot of those algos are all going to come rushing for this stock, and it's going to see another nice big. Again, I don't want to see it as a meme stock, because that's what it was a little bit last year. And that's, people always get afraid of this. Is the stock going to race up like it did then back in 2019? I don't know, but it could run up to its highs from early 2021, which would be very, very bullish. So again, as it moves up, you move up your stop out level. So you guarantee minimizing your loss. And then once the stock getting a nice profit, then you move your stop up level to guarantee you a gain. So if it comes back down, you get out and everything works right.
Right. Yeah. I mean, there are some turnaround stories, and that's the thing, because most like CNBC will never talk about a $5, $10 stock. And I feel that having your professional expertise and guidance on stocks, because hey, people come to you, ask you about AMC, GameStop, all these things, right? So that's a regular, just as an example to show the folks that yes, Matt does trade options, but people reach out to Matt for many different things there, Matt,
Absolutely.
right?
Absolutely. And we're constantly talking about it. People all the time saying, hey, I own this. I've got a loss. What should I do? Hey, I own this, and I've got a nice gain. What should I do? Or it's whatever. I mean, we're not just talking about my ideas. People are throwing their ideas in there all the time, asking for me to comment on them, and some of them are long-term trades. Many of them are long-term trades. Some are swing trades, just for a couple of weeks. That's great, and I love swing trades. It's a lot of what I've done in my career. And for those who aren't here, I've been here. What is my background? I mean, I spent 25 years as a trader at Solomon Brothers and Merrill Lynch. Solomon Brothers was, if you've read Liar's Poker, that it was the trading firm of the 80s and 90s. I was there for 15 years there. By far the most powerful trading desk, and I won't say by far. We were the most powerful trading desk, and Goldman Sachs and Solomon Brothers dominated trading. And there were some other good trading firms, but nobody was close to us. And I talked to all the biggest, the biggest hedge funds, the biggest mutual funds, insurance companies, banks, et cetera. I talked to those trading desks and really learned how not just be a strategist that looks about what should theoretically happen, but what will happen. And that's what you learn from all that trading. And the last 15 years, I've been doing this with Miller Tabak, still doing trading, but more on the strategy work. And again, that's what's helped me to do these swing trades and shorter term trades rather than just the long term stuff that most of Wall Street tends to concentrate on. And again, there's nothing wrong with that. We want a bucket of our portfolio in those long-term trades. But those who have the inclination and the time and the desire to maximize their gains through some little bit more active trading, this is kind of my specialty, and I've been able to help people make some real nice money, and I want to keep doing that. In what I think will continue to be a tough year this year for many investors, and it's there's going to be a lot of investors at the end of the year where they're going to be down a lot of money, and our goal is to not just have not lost money, but made money.
Right. No, absolutely, man. And I know that's really been your thing. You're very accurate with really, your guidance, your expectations of the market. I learned a lot with these sessions. And all right, man. I mean, we've been here for about like 3 hours, Matt. So I mean, you're extremely gracious with your time, man. I want to thank you for being here with us, and for just pulling out there always for the chat members every day, Monday to Friday, trading with them. I'm gonna stick around here for a Q&A for some people that might have questions on your strategy or on the portal. I'll show them around some of the trade alerts and everything, entries, all that stuff. Do you have any closing remarks on your end on the market, or do you want to go over tickers right now? How are you doing with time?
Yeah, I do have to run here, so I'm just going to do just to kind of wrap up here, just to say that what happened today at the Fed, which is helped the market rally, and if it rolls back over tomorrow and we get another big sell-off, we're still going to get a rally at some point soon. This may be the beginning of a rally the last several weeks. It may be delayed for another week. We get one more sell-off and then a rally. Either way, we're not solving the problem. What is better? Okay, is inflation better than it was 2 or 3 months ago? No, it's worse, and the outlook is worse. Now, yes, it will get a little bit better, but it's going to stay high. And the reason why I say the outlook is worse is because the war with Ukraine and Russia is going to keep those prices high. Interest rates, the Fed is going to keep tightening. Okay, all the data shows that the market tends to stop going down once the Fed stops tightening, not beforehand. If they're going to be tightening a lot more, to think the market's going to rally a lot more is a little ridiculous, in my opinion. So let's take advantage of it. And I'll say the other thing too is the last 3 times that the market has bottomed, for a real bottom, it's always been because something changed. In 2020, it happened when in the March 2020, the depths of the pandemic, the Fed came in with a massive QE program. That stopped the 35% decline. In 2018, when the market was down 20%, the Fed came in and pivoted their policy. Actually, the same thing happened. Then in 2009, the market didn't change on the Fed. It changed when the authorities changed the mark-to-market rule. Okay, on banks. So what they didn't have to no longer had to mark to market their assets, and therefore they didn't have to sell something every single day to keep their equation in line. Okay, the same thing actually kind of happened in Europe in 2011, 2012, which also knocked our market down about 20%. And the Fed, I'm sorry, the ECB, or the Euro, the EU came in and bailed out Greece. So again, you need that event. We haven't had that event, and we're not going to get that for a while. And so this is going to be a lot of volatility. Some people, I think the market could easily go down to 3,800. There's some people even, this is the S&P, people think go lower. But my point is that even if it doesn't go a lot lower from here, it's going to be bouncing around. And for those who are active traders, we have the tools to take advantage of it. And so it's going to be a wild time. I think weeks like this week are really, really tough to trade. And we've made some real nice trades. We made others that didn't work out as well, but we've had some real nice trades a long time, and in the net turnout has been quite good. We want to be continue to do that, and I think we're going to get the opportunity because the tools are there to do it in both directions. Because we have indexed ETFs whose options trade 3 times a week, expire 3 times a week. Big cap and intermediate cap companies whose options expire every single week. They don't cost a fortune to buy, and they can still see a lot of. Obviously, when volatility is high, you see the wild moves, and you make money in the options. When the market's barely moving, it's really hard to make money in options. We got to take advantage of it while we can. That's really all I have. And I hope you'll stay and listen to what Rodrigo's will show you there. And Looking forward to seeing you guys, the new members. Thank you so much for joining. We'll see you tomorrow in the chat room. It's going to be another very, very interesting day, and we're going to stay very nimble because at some point, whether it be tomorrow or next week, we're going to turn very bullish on this market. And but we may see a big hiccup between now and then too. So it's going to be fun. But it's staying. You know, it's what the old movie, the old commercial said: "Stay thirsty, my friends." For the old Dos Equis beer, I say stay nimble, my friends, because there's going to be some great opportunities, not just over the next 6-9 months or longer, but I think for the next few days as well. Thanks a lot, Rodrigo, and we'll talk to you real soon, buddy.
All right, thanks a lot, Matt Maley there. Thanks a lot for being here with us. There you go. Chief Market Strategist there at Miller Tabak and lead trader at the Benzinga Stock Picks Inner Circle chat room. So as you can see, I mean, Matt was here with us for about 3 hours. That's extremely grateful. Typically these Bloomberg interviews, he's only like there, gives them a couple of minutes with us. As you can see, he's a lot more, flexible, and, don't even mention the chat room because he's there all day, Monday to Friday. The boss, Solomon Brothers, that's impressive. I'm telling you, this guy's OG. Like Matt Maley is like, legit 100%. It's like if you go to get like a procedure, a medical procedure, you want to definitely get the doctor that's been doing it, like an experienced doctor with several some good experience on their belt, right? Not that fresh college grad, met doctor, whatever, right? So that's pretty much the way I look at it as trading, right? You do want to make sure that you do get the best that your dollar can get you. In this case, I can tell you 100%, it's going to be Matt Maley. 40 years. You can't get any more years than that. Like how many years do you want? Like 70 years, 60, 100 years? Like 40 years is like pretty solid. Several lifetimes there, I'll tell you. So, and keep in mind, 100% focused on Wall Street. He traded at Merrill Lynch, Solomon Brothers, and he's at Miller Tabak, and obviously you see him on the interviews, all that stuff. So I showed you the chat room, well, more or less like how it works. So this is I opened a window just to open the chat room, right? So these are some of the trades from today. I'm just going to scroll from like some of the things from today that happened. And if you have questions, put them in the chat. Feel free. Let's see. Oh, so let me explain this first, right? Before anything, there's 2 channels. So there's Matt's important messages, and then there is the inner circle chat. So the inner circle chat, everybody can post there, including Matt. And then you have the Matt's important messages, and that's where only Matt can post. And he's posting entries, exits, pretty much the raw information that you need to enter, exit, add, or take off a trade, right? You don't have to be looking at charts trying to figure all this stuff out. Matt's already doing that. He's been doing that for 40 years. Okay. So let's just, make sure that we know that, hey, this is not just, anybody else. We're talking about somebody that's very, very experienced, knowledgeable, and, connected in the industry, I believe. So this is Matt's important messages. You can see only Matt is posting entries, exits, all that other stuff. Inner circle chat, everybody, there's a couple nice helpful links there. But we're just going to scroll here up and see what's going on. So I'm going just like from the most recent. Well, let's see where we are. This is from today. It's like 1 p.m. So David closed TQQQ calls for a nice gain. David's been banking on that chat. He's been there for a while. I've seen him there. He's very active, helping the new guys out there. And there's a lot of folks out there that do that really, stand out, go out of their way to help the new folks in, right? Because keep in mind, the better the community, the bigger it is, the better. And we got to make sure that, we help each other out so that we can make that group as efficient and as effective as possible with all of our times, because it's an international group. There are people from Canada, US, Europe, all over the world. So let's just go ahead and scroll down here, see what we can find. So they're pretty much, everybody's talking about the Fed here. It's 2 p.m. Let's see what's going on. Yeah, I'm showing. So Matt is also posting on this chat room, PVDG. You're gonna see it there. T Miles, appreciate it. We'll tune in more often. You should, brother. We do a lot of cool stuff here. Um, the chat room is a different, a separate chat there. Let's go. Day Trader Mom, she's very helpful too. Shout out to her. Let's see who else. J Trade, Zule. So they're talking about the Fed. There's a lot of education that is in these messages, and this is where everybody's posting. So as you can scroll, you can literally like carry on the conversation, see where they're going with it, understand it, make sense of it. There's a lot of people that just sit back and look at the chat and kind of take it all in, right? Keep in mind these are all like mini Matt Maleys that have been trained by Matt. Um, I'm trying to find somebody here that posted anything about their trades. Um, Williamsburg, should we take profit on longs? Matt Maley. Um, so you can see Matt's posting there. Remember, he's answering messages that people post. So you could post here, he'll answer and you can talk with him, right? Biking Chef, what up, Biking Chef? Had SVXY calls. I should have held, could have doubled my profits. You know, that's I mean, you made some good profits there, Biking Chef. So, that's all right, man. That's good. Happy I had to stay nimble. Thanks for the advice, Matt. Well, that's good, right? That's good. So you see he's talking with Matt there. Um, let's see, Matt. So this person that said, should we take profits on long? And Matt said, my TQQQ calls are up about 75%. I'm going to take profits. And he told you that he took profits today and it was about 71% when he sent out the sell alert. So he's answering here in this chat room, and he's also posting entries and exits in the other chat room, right? Natural gas, a biking chef, EPD calls up 100%. This guy is banking there. Let's see what else we can find. Holy shit. Well, that's the name of him. That's his username. I wasn't, that's the username of the person there. This person made 22% off SQQQ calls. So that's very good. Let's see what else we can find. Um, so they're talking about the market here, the Qs as well, SQQQs. Um, so value play. What a monster rally. Tempted to go flat, or will this continue for some time? Glad I have stocks. Wow, 3-day positives in a row. This is a monster. This is the short covering. Let's see. Somebody was trading Bank of America here, made some insane gains. I want to show you. This is from today. I'm showing you what happened today. The more volatile it gets, the better and the hotter it gets in the chat room. I don't think you've ever seen anything like this. I'm pretty sure, because this is Matt Maley's personal trading style, and of course with a mix of retail because we're all together there, trading ideas, sharing ideas, all that stuff. Let's see what we got here. Um, Carlson the Flyer. I remember this person. Bank of America next resistance level is just above 41. You'll see where this goes. J Trade says I just sold half of my Bank of America just in case. I'm taking you through the motions of what happened through the chat room if you had this open. Chris F. Wow, I just looked at those Bank of America calls that Matt told us about. And they're yeah, it's my cat. And they're up about 200%. So these are some calls that Matt Maley posted out, right? These are calls that Matt said, hey, look at these calls right here. Those were up about 200%. Somebody else here, Nocturnal, said, can the rally continue until tomorrow? Currently up over 160% on TQQQ calls. 3:46 p.m. This is today. This is today. These are all different people you can go in. These are real people. These are not bots. These are not fake accounts like you see on all these other places like Reddit or Wall Street Bets. These are all real people. I know because I talk to them, and you'll see people from all over the world. You got Nutrix there, Nocturnal. What up, Chris? Tammy. Tammy's been very helpful to the group. And I'm telling you, that's what I'm saying. Like, I cannot talk about the chat room without mentioning the great community that we have in there. Um, let's see what else we can find here. So those are a couple highlights. And I mean, keep in mind, these are the people that actually posted. There's a bunch of people that like make money and they just like, hey, they don't post about it, That's fine. So at this point, it's 4 p.m. So at this point, can't buy any more contracts at that, 4 or 5 p.m. So uh, those were some, and keep in mind, right? Last Mile says it perfectly. We got earnings tomorrow. We do have earnings tomorrow. That's going to be a great, great opportunity, right, for us to be able to profit on either side. I don't know what specific earnings Matt will be looking at tomorrow, but I do know that he will be looking at earnings. So for those that do join, keep in mind there's a 7-day money back guarantee. So like literally, you should try it out. It's at least try it out for the earnings season right now. These 7 days, I would say. You're not going to get that much closer to a chief market strategist. I'll tell you that. Not for this price. Um, so this is the chat room. I opened it in one view. You can have sound alerts here. You can put the channels all. If you see the yellow bell, that means that you do have the sound alert. So what a lot of people do that have full-time jobs, all they do is they have this window open and they have a sound alert. It's going to make a pop. You have your headset or whatever on your phone, and you can get that alert, right? That sound alert. And the other thing that I wanted to tell you guys is that we do have a proprietary scanner just for the Inner Circle members. You're not going to find the scanner anywhere else out there in Benzinga. The reason is because it was built here for the Inner Circle members. So there's no particular special order for you for this. You have gainers and losers. It's updated. It updates the entire market quotes in 15 minutes. So every 15 minutes, you have to be looking at it. So you'll have stocks that are down drastically here on the loser side, and a good place to start looking, right? I'm not saying go out here and buy everything or short this. I'm just saying if you want to get like trade ideas from different places that are unbiased per se, like a scanner, I would say a scanner would be a good place to go to get started. Of course, you're going to find a lot of garbage and trash and things you don't want to touch, but like that's part of doing, your homework, right? You got to find that stuff if you want it. Or you can just really trade whatever Matt gives you. I'm just trying to tell you where you can find some like trade ideas or stocks to look into, do a little bit of research. And if you like any of them, you just bring him back to the chat room, right? Bring him back to the chat room and you talk with Matt and the rest of the folks there, with Nocturnal, with Last Mile, Zule, Chris F, all the friends there, right? Everybody there. Um, and of course, you can do this on the other side on gainers. LTHM. I don't know what's been happening with the stock, but I'm going to check in this chart. It's right next to it. And you can just see this just like a massive rip here. Like, I don't, I think this was the earnings. They did have an earnings call and yep, it's still going. So, I mean, this scanner does give you a pretty good, scan of what's happening out there. Some other, I'm wondering how this company's doing because I do know they got an earnings. This must have been earnings. Yeah. Interesting. Interesting. So, I mean, that's the thing. You'll get stocks here that are in different industries that you will just see like, oh wow, like that company, um, you know, they're having a good earnings. They did have good earnings. That's interesting. See, like for example, like I wouldn't trade this stuff here. This China liberal thing. Um, I mean, here's the thing. When I'm telling you to look at these stocks, I'm assuming that, like you're gonna do a little bit of research, see where they are, where they're headquartered, all that stuff. Never just kind of see a ticker and buy it like out of FOMO or nothing like that. I would really suggest to, if you see something that you like, just bring it up in the chat room here. See what the rest of the folks think about it. These are all people that have been there with Matt for a year or so, people that have years in trading background, trading with Matt, and it's good to get a second opinion. That's why the whole goal of the community, right, is there. Um, it's there to help you. Remus, good question. Are the Tuesday sessions recorded? Yes, they are recorded. It's for like 30 minutes, and actually, I had a call with Zoom today, and we're gonna make him in a way that if Matt wants to go over 30 minutes, he can do it. There's not gonna be like a limitation on anything of like the video backend stuff. So those sessions might get a little bit longer now. And it's good because everybody engages. I literally was in that call like this Tuesday. It was like 85 people in that call. There's like 100 people in the chat room. So I'm telling you, when Matt talks, people listen 100%. 100%. Yes. Um, so yeah, he will review the market, and right now they're 30 minutes, but they're going to be longer, I think. I mean, they will be able to be longer now because now there's a change on the video thing. So now he would be able to do it longer if he wants to. That's starting next week. Remus, I work, but I can monitor the chat room periodically through the day. Absolutely, dude. Look, hey, today was the Fed meeting. Today was the day that you had to be kind of like, peeking on the chat room, right? Today was the day. Literally, it was like 3 hours of the day, 3, 4 hours of the day. The meeting was like at 2 p.m. and the market for options closed at 4 p.m. That's literally 2 hours out of your day that you might have had to peek in this. Now, keep in mind, we plan ahead. We plan ahead of these events, and we already have a mindset coming into these things, into these market events. So as a member of the chat room, not only are you going to be aware what we're doing, what Matt is doing, right? What Matt is doing, what he's thinking about, how he's positioning himself, but also when the day comes, you're already going to have your trade set up already. It's not like, oh my God, what do I do? And at that point, it's just a matter of executing, hitting that buy and hitting that sell, and trade following Matt. He's going to tell you exactly when to buy, exactly when to sell, the exact contract, strike price, expiration, everything. You could literally put a bot to do these trades for you if you train him to. So he's going to put him there in the chat room, right? So you'll see that inner circle chat. That's where everybody's posting Matt's important messages. That's where everybody there is posting. So yeah, folks, I think we covered the majority of the stuff here. It's been a good session here. I want to thank everybody for joining and attending. A lot of members here from the Stock Picks Inner Circle chat room. Shout out to all you folks. And just remember, there's still a lot of volatility ahead in the markets. It's still not, we're still not through like Matt said. There's still a lot of volatility coming up, and you do want to be able to be on the right side of that trade. Don't find yourself taking the wrong side of the trade at the worst possible time. Trade with a community, trade with a group that, like-minded traders, people that really want to succeed, that want to trade with you, that want to earn and be part of something bigger, right? Not just trading by yourself. That's the worst thing you could do. Trading by yourself, just, in a vacuum. It's really something different when you trade with a community, but then you finesse that and you find the best community that works for you, right? So, you have someone like Matt Maley, right? Does he have experience? Yes, he does. Has he been around in the markets, all that stuff? So, do your own due diligence. And for any other reason, we do have a 7-day money back guarantee. So you can literally try it out. And if it doesn't work out, you get all your money back and that's it. You move on. That's it. So if it works, great. You stay, you keep making money, you learn from Matt, and that's it, right? That's really how this thing works. So we're kind enough to throw in that 7-day money back guarantee. I'll tell you, in this economy, nobody else is doing that. So take advantage of that. If anybody does have questions, we're going to put the contact in the chat so that you can email and call, and any questions that you have on the chat room. So without further ado, folks, thanks a lot for being here. Shout out for everybody, all the folks that came through in the chat. Falcon, good stuff, man. Seeing you there. Let's go, guys. All right, folks. Everybody have a great evening. Stay safe. Happy trading. And again, join the chat room. Give it a shot. Any questions, reach out and we'll be happy to help you guys here. Thanks a lot and enjoy the evening.